Welcome to Talk Tickers. You're busy, but staying informed on key earnings calls is crucial. Today, we're zeroing in on eBay's first quarter of 2025.
Yep.
Our mission: to cut through the noise and deliver the essential insights, making sure you understand what really matters from this report.
And the headline for eBay's start to 2025 is, well, strong performance. They've not only met, but actually exceeded expectations across all the important financial numbers.
Okay, exceeded expectations sounds promising. Let's dig into the specifics. What are we talking about in terms of actual growth?
Well, the total value of goods sold on the platform, what's called gross merchandise volume, or GMV, saw an increase in nearly 2%, reaching around $18.8 billion.
Okay, nearly 2%.
And what's notable is that this marks the fourth straight quarter of positive growth in this key metric.
4 quarters in a row, right?
Exactly. Revenue also ticked upwards by over 1%, landing at $2.58 billion.
And what about the bottom line? How did profitability look?
On a non-GAAP basis, which helps to give a clearer picture of their core operating performance. It excludes certain one-time items, you know, the adjusted view.
Yeah. Earnings per share really jumped by a significant 10%, hitting $1.38.
Wow, 10%.
Additionally, eBay returned a substantial $760 million to their shareholders through both buying back their own stock and issuing cash dividends.
Okay, $760 million back to shareholders. So a healthy quarter all around. Were there particular segments of their business that really stood out as drivers of this growth?
Absolutely. Their focus categories were a major engine here, with GMV in these areas growing by over 6%.
Over 6%.
And these categories now make up more than a third of all the goods sold on eBay globally.
More than a third. Okay,
Yeah.
Interesting. And which specific areas fall into these focus categories?
The standout performer for the second consecutive quarter was Collectibles. And within that, trading cards are really seeing impressive momentum. Trading cards, right. We hear a lot about that market. Now, cross-border trade is something a lot of businesses are grappling with right now. How is eBay navigating the current complexities in that area?
Yeah, good question. New tariffs and, evolving customs rules in the U.S. have definitely created some uncertainty, particularly for smaller businesses engaged in international trade. And this has had a knock-on effect on consumer confidence in some areas.
So how are they handling it?
eBay is tackling this head-on with a couple of key strategies. One is their SpeedPAK shipping program, designed specifically for cross-border sellers.
SpeedPAK?
Yeah, this aims to handle a lot of the complexity involved and even includes tariffs right at the checkout.
That sounds like it could really simplify things for sellers. What about those who aren't using SpeedPAK?
For transactions outside of SpeedPAK, eBay is focusing on clear communication with buyers. They're providing, educational messages about potential new costs, the information buyers might need to provide for customs, and the possibility of delays. This information is being integrated right into the item pages during the checkout process and through localized info resources.
Beyond these direct actions, does eBay have any sort of inherent advantages in dealing with these global trade shifts?
They do, actually. Their naturally diverse global network of both supply and demand is a significant strength.
Right, the scale helps.
Plus, a large part of their inventory consists of pre-loved and non-new goods, which often appeal to consumers who are more budget conscious, potentially offsetting some of the impact of increased costs on new items,
That makes sense. Let's go back to those focus categories, especially trading cards. 9 straight quarters of accelerating growth is pretty remarkable. What's behind that sustained momentum?
Yeah, 9 quarters is impressive. A key driver is their strategic partnership with collectors and their grading and authentication arm. PSA.
PSA. Big name in grading.
Yeah. Exactly. Since the PSA storefront launched on eBay in the third quarter of last year, over 500,000 trading cards have been sold through it.
500,000 just through that storefront?
Yeah. Gives you a sense of the scale.
That's a significant volume. Are they integrating PSA in other ways too?
Yes. Further streamlining the experience. In January, eBay started incorporating PSA's data on the population of graded cards directly onto the eBay item pages.
Oh, interesting. So you can see rarity right there.
Precisely. So if you're looking at a graded card, you can now see exactly how many others have been graded at that level, which is crucial for assessing rarity and value.
Right.
And even more recently, in March, they launched a new feature allowing buyers to ship their trading cards directly to PSA for grading right from the eBay platform.
Oh, wow. Direct shipping to grading.
Yep. This saves time, effort, and potentially even shipping costs. Makes the whole process smoother.
Fashion is another major area for eBay, right? How is that segment performing and what are they doing to enhance it?
It really is.
Yeah.
Fashion on eBay generates over $10 billion in GMV annually, so it's a huge part of their business.
10 billion. Okay.
They're really focused on improving the experience across luxury fashion, pre-loved apparel, and streetwear. This includes using AI to power more engaging shopping experiences like Explore and Shop the Look features.
More AI integration.
Definitely. They're also expanding the reach of their authenticity guarantee program and tapping into new sources of inventory in international markets.
AI seems to be increasingly woven into their strategy everywhere.
Absolutely. They've also rolled out a brand new AI-powered discovery experience for fashion in the US and the UK. Instead of static pages, users now see dynamic, continuously updating feeds.
Like an endless scroll.
Kind of, yeah. With a mix of content like videos, live events, promotions, and storefronts. And in the first quarter, they officially launched U.S. pre-loved apparel as a new focus category, complete with enhanced standards for grading the condition of items.
Okay, pre-loved getting a bigger focus. I also noticed some specific initiatives mentioned for the UK market, particularly around their consumer-to-consumer business. What's happening there?
Yeah, the UK C2C piece is interesting. They've put a significant effort into upgrading that experience, aiming to reduce friction for individual sellers.
Making it easier to sell stuff.
Basically, yeah. And these efforts have really paid off, outperforming their internal targets and improving overall GMV trends in that segment.
Good results there.
They also introduced a buyer protection fee in the UK in February, which has helped to narrow the gap in how they monetize these transactions. The take rate, basically.
Ah, okay.
While still maintaining strong GMV growth, which is key.
And what about shipping in the UK? Anything changing there?
They're in the process of significantly expanding their managed shipping program in the UK. The goal is to simplify the shipping process for sellers, reduce costs, and ultimately build more trust with buyers. Recent additions include options for free shipping and allowing sellers to specify carrier preferences. And they plan to add pickup and drop-off options and support for larger items in the second quarter.
So improving the logistics.
Right. And they've also started gradually requiring new and less frequent UK C2C sellers to use managed shipping, sort of pushing adoption.
So AI is not just for the buyer-facing side of things then. How are sellers benefiting from AI tools?
Oh, definitely for sellers too. eBay launched a really interesting simplified AI-powered listing process for individual sellers in the US, the UK, and Germany towards the end of Q1.
How does that work?
Sellers can now start a listing just by uploading photos and a title, and generative AI kicks in to help identify the product and automatically fill in key details like the description and specific item attributes.
Wow, so it does the heavy lifting.
A lot of it, yeah. Sellers then have an intuitive step-by-step process to review and refine these details, set their pricing, and configure shipping.
And how's the reaction been?
The initial feedback has been overwhelmingly positive. High satisfaction rates, like 90% plus. More sellers completing their listings, new sellers coming on, reduced listing time, and even a boost in the number of items sold per listing attempt.
Sounds like a win. And for businesses selling in bulk?
Their magical bulk listing tool for business sellers, which first launched in the US and has now expanded to the UK and Germany, is also delivering significant time savings, like less than half the average listing time compared to the old tool.
Half the time. That's huge.
Yeah. And it's become the go-to tool for listing sports trading cards, and they've seen a direct correlation with an increase in the number of new listings in that category each week.
Okay, advertising is always a critical component of eBay's revenue. How did that perform in the first quarter?
Ad revenue looked good. Their first-party advertising revenue saw a healthy growth of 14%.
14%. Solid.
And the number of active promoted listings continued to climb, exceeding 1.1 billion. That's out of a total of 2.3 billion listings, so a big chunk are promoted.
Almost half.
Yeah. They're also seeing strong adoption of their single promoted listings product, with over 3.7 million sellers now using it.
So sellers are buying in.
It seems so. The growth was broad across their advertising offerings, but promoted listings general ads were the largest contributor. They said that's driven by improvements in personalization and relevance on the item viewing page.
Better targeting.
Exactly. Additionally, more sellers are using their promoted offsite ads, and they've made improvements there too, like automated image optimization.
What about their payments and financial services side of the business? Any key updates there?
A few things. They've expanded their partnership with Klarna to offer buy now, pay later options in the US.
BNPL, right?
Yeah, and the early results are encouraging, with a noticeable increase in the average order value for those transactions.
People spending more when they use it.
Seems like it. They're also seeing increasing adoption of the eBay balance feature in the UK among C2C customers, which is capturing a small but growing share of their wallet and leading to more purchases on the platform.
Keeping money in the ecosystem.
That's the idea. And to bolster the resilience and success rates of their payment processing, they've added Checkout.com as a new payments partner.
Diversifying partners. Okay. There's been some movement in the leadership team as well, I understand.
Yes, that's right. Their CFO, Steve Priest, will be departing. Peggy Alford will be taking over that role on May 12th.
New CFO coming in.
And eBay is also evolving its broader leadership structure. They said it's to really drive innovation and better collaboration across teams. This includes expanded responsibilities for Jordan Sweatnam as Chief Commercial Officer and Mason Rasha as Chief Technology Officer.
So consolidating some roles.
Seems like it. Aligning tech and commercial closer, perhaps. Additionally, Chief Product Officer Eddie Garcia will be leaving the company.
Okay, some shifts at the top. Let's zoom in a bit more on some of the specific financial figures you mentioned earlier.
Sure. Their non-GAAP operating income for the quarter was $771 million. As we mentioned, GMV grew nearly 2% organically, FX neutral.
Right.
Though there was some unevenness in demand throughout the quarter. February was a bit muted, March improved. Golden, the collectibles marketplace they acquired, added about 30 basis points to growth.
Okay.
The U.S. saw GMV growth of almost 0.5%, largely driven by those focus categories like trading cards. International GMV grew by nearly 3% on a currency-neutral basis, though the macro environment in Germany and UK was weaker.
But the C2C investments helped there.
Yeah, seemed to mitigate some of that weakness. Their trailing 12-month active buyer count increased by over 1% to 134 million.
Still growing the buyer base.
Yep. And enthusiast buyers, about 16 million of them, actually increased their spending slightly.
And the revenue and profitability margins, how did those shake out?
Revenue came in at $2.58 billion, representing over 1% organic growth, currency neutral. That was an acceleration from Q4.
Okay.
Their overall take rate, the percentage of each transaction that eBay keeps, is around 13.8%, up slightly year over year. The UK C2C changes actually pressured the take rate a bit, but that was offset by advertising and financial services.
Got it. And margins.
The non-GAAP gross profit margin saw a small dip, mainly due to depreciation expenses and the costs associated with their promoted off-site advertising efforts.
Depreciation impact, right?
Yeah, that hit both gross and operating margins. The non-GAAP operating margin was 29.8%, down slightly year over year. GAAP earnings per share showed a significant increase, over 25%, but that was largely due to lapping investment losses from last year.
So the GAAP number had some noise.
A bit, yeah. Free cash flow for the quarter was strong at $644 million.
Okay. What kind of outlook are they providing for the next quarter and the rest of the year?
They've issued a slightly wider than usual guidance range for the second quarter. They said that's primarily due to the ongoing uncertainty surrounding tariffs and potential demand shifts.
Wider range makes sense given the uncertainty.
Exactly. They anticipate Q2 GMV to be in the range of $18.6 to $19.1 billion. There's about -1% to +2% growth, FX neutral, and revenue between $2.59 and $2.66 billion, similar growth range.
And the take rate.
They do expect their take rate to improve sequentially in the second quarter, helped by a full quarter of the UK buyer protection fee and the managed shipping ramp-up.
Okay.
Q2 non-GAAP operating margin is guided a bit lower, 27% to 27.8%, due to some headwinds like managed shipping costs to depreciation. Non-GAAP EPS growth expected between 4% and 11% year over year for Q2.
And the full year.
For the full year, their overall commentary remains consistent. They still expect low single-digit growth in GMV, FX neutral, and slightly higher revenue growth. Non-GAAP operating income growth roughly in line with revenue. They're planning to repurchase at least $2 billion of their own shares in 2025 and expect high single-digit non-GAAP EPS growth for the full year.
Okay, consistent outlook overall despite the Q2 caution. So putting it all together, what are the key takeaways for someone keeping an eye on eBay?
Well, I think eBay's consistent GMV growth, even with bumps, especially in their focus areas in international C2C, it really highlights the underlying strength of their marketplace model, wouldn't you say?
Yeah, it seems resilient.
And their proactive integration of AI tools, both for buyers and sellers, shows a clear commitment to innovation and improving the experience.
The AI focus is definitely noticeable.
Right. And while macroeconomic factors and tariffs create uncertainty, their diverse inventory, with lots of pre-owned and refurbished goods, probably provides a bit of a buffer.
People look for value in tough times.
Exactly. Finally, the leadership changes could signal a renewed push towards strategic execution and maybe faster innovation in a really competitive e-commerce landscape.
Interesting times for them. All right, this is the part where we put on our outrageous but plausible hats. Remember, this is not financial advice, just some food for thought based on what we've heard.
Definitely not advice.
Okay, idea one. Given eBay's strong focus and impressive growth in collectibles, particularly trading cards and all these integrations like PSA grading, here's a thought. Maybe consider taking a look, a long position perhaps, in companies that specialize in ultra-secure, high-end storage and display solutions specifically for graded collectibles.
Ah, the ecosystem around the collectibles.
Exactly. The thesis is, as eBay further legitimizes and boosts the value of these assets, the demand for premium ways to store and show them off could really grow, benefiting niche players in that market.
Interesting angle. Okay, here's another one, playing off the fashion side. With eBay's clear emphasis and success in pre-loved fashion, plus their investment in those AI discovery tools.
Right, the AI feeds for fashion.
Yeah. Think about maybe exploring a short position in publicly traded companies that own and operate large outlet malls, the ones heavily reliant on discounted new apparel.
Shorting outlet malls.
The idea is that the growing consumer acceptance and the increasingly sophisticated online experience for pre-loved fashion, like on eBay, could increasingly divert traffic and spending away from those traditional physical outlet centers.
Diverting dollars from the mall to the marketplace? Plausible, certainly outrageous.
That's the name of the game here.
That was your deep dive into eBay's first quarter 2025 earnings call. We've extracted the key information and explored some potential implications.
Hopefully give you a good overview.
We hope this has given you a clearer and more efficient understanding of what was discussed. What are your thoughts on eBay's performance and future direction? What aspects of the e-commerce landscape do these results highlight for you?
Yeah, lots to think about.
We encourage you to continue exploring these ideas. Remember, staying informed is a continuous process. Join us next time on Talk Tickers for another breakdown of a crucial earnings call.